Welcome back to Dinar Community Channel. After years of rumors, 5 elite currency insiders have finally come forward with the truth about the Iraqi dinar revaluation. From classified government meetings to secret IMF strategies, what they reveal changes everything. You've heard the speculation, now hear the facts from those who wrote the playbook. This isn't hype, this is the real story they never wanted you to hear. For years, speculation about the revaluation (RV) of the Iraqi dinar has swirled in financial circles, often dismissed by mainstream economists yet passionately supported by a global community of investors. With rumors, misinformation, and hopeful predictions flooding the space, the line between truth and hype has remained blurry. But now, 5 respected currency experts, each with a background in global finance, central banking, or foreign exchange policy, have come forward to break their silence. Their insights reveal a deeper layer to the story, one that goes beyond conspiracy and into the realm of geopolitical strategy, international trade, and long-term currency reform. These 5 individuals didn't speak out lightly. Each carries decades of experience in foreign exchange analysis, monetary policy, and emerging market economies. Their commentary offers rare clarity, and for many in the dinar community, vindication. From private bank meetings to IMF strategy briefings, these experts have seen enough to finally share what they know. And what they reveal might just change how the world views the Iraqi dinar forever. The first expert, a former advisor to several Middle Eastern central banks, laid the foundation. With experience in advising on monetary stabilization and FX reserve management, he began by confirming what many suspected. Iraq's economic indicators have drastically improved over the last 3 years, yet the currency hasn't reflected those gains. According to him, this is not a technical glitch. It's a deliberate holding pattern. Iraq's central bank, in coordination with global stakeholders, has kept the dinar undervalued for strategic reasons, primarily to rebuild reserves, control inflation, and position for a smooth integration into international markets. He explained that since 2021, Iraq has doubled its foreign reserves, stabilized oil output, and implemented currency auctions to prevent rapid fluctuations. But behind the scenes, IMF consultants and external sovereign advisors were actively mapping out a phased currency reform strategy. The revaluation, he said, is not a matter of if, it's a matter of when and how fast. The second expert, a former currency risk analyst for a major Swiss bank, echoed this view but added more context on the timing. For over a decade, investors treated the dinar like a dead currency. But Iraq's monetary data tells a different story. Over the past 24 months, transactional volume in dinars has quietly increased across borderless financial networks, including digital trade settlements. He pointed to SWIFT data, indicating that regional banks in the UAE, Turkey, and Jordan had begun preparing settlement corridors involving dinar liquidity back in early 2024. His key insight was about IMF coordination. The IMF's Article 4 consultations with Iraq have shifted tone. Initially focused on corruption and structural reform, they're now focused on capital mobility and foreign investment safeguards, textbook indicators of pre-RV groundwork. He even suggested that private memos between the IMF and CBI, Central Bank of Iraq, had already outlined tiered exchange scenarios, potentially explaining the fluctuating rates observed in private exchanges. The third expert came from the intelligence world, a former FX surveillance analyst for a Western government. His knowledge of global currency patterns was enhanced by access to classified tracking systems that monitor black market FX transactions, currency flight, and offshore movements. He confirmed what many in the dinar community had long suspected. Iraq has been running parallel exchange channels, and there's significant divergence between the public rate and what high net worth regional actors are paying in private deals. He revealed that between October 2024 and March 2025, at least 3 large-scale dinar-to-dollar conversions were logged above the official rate, involving sums north of $100 million each. While these transactions were not acknowledged publicly, he said, they were flagged in regional banking compliance reports and categorized as state-sanctioned sovereign FX restructuring. Perhaps most explosively, he claimed that U.S. Treasury officials had attended recent off-the-record strategy sessions in Dubai and Doha, where Iraqi financial officials presented revaluation models and currency adjustment pathways. They weren't talking about if Iraq could revalue, he said. They were discussing the optimal launch window. The fourth expert, a macroeconomist and former IMF mission leader, offered the most cautious but still revealing analysis. He stressed that currency revaluations of this magnitude are extremely rare and require years of preparatory work. Revaluations don't happen in isolation. They occur when fiscal, monetary, and geopolitical factors align. He detailed how Iraq's post-war recovery, combined with structural oil reforms, had created the conditions for revaluation. But he emphasized the role of geopolitics. The push for a dinar revaluation isn't just about Iraq. It's about regional balance. A stronger dinar will shift capital flows, trade alignments, and even soft power dynamics across the Gulf and beyond. He also noted that the IMF had quietly revised its internal growth projections for Iraq in 2025 and 2026, which, while not directly referencing currency changes, indicated preparatory signals, often seen before major economic policy shifts. He speculated that the dinar could revalue in multiple phases, an initial adjustment to a realistic regional parity, followed by a gradual float or peg mechanism, similar to how Kuwait and Saudi Arabia operate. But it was the fifth expert, a retired central bank executive from Asia, who delivered the most surprising statement of all. Having overseen his own nation's currency shift in the early 2000s, he explained the psychological and market mechanics of a revaluation. What Iraq is experiencing mirrors what we went through. First comes denial, then disbelief, then silent accumulation by insiders, and finally, a sudden repricing. The signs are all there. He described Iraq's silent moves: tightening currency supply, auditing legacy accounts, integrating biometric ID for exchange tracking, and launching new digital banking tools, all textbook indicators of a nation preparing to control post-RV capital flight. But then he dropped a bombshell. I've seen leaked drafts of CBI policy memoranda. The target post-RV exchange rate is between $3.80 and $4.50 per dinar. And the window is within the next quarter. He admitted the risk of volatility and potential delays but remained confident in the direction. They are going to do it. The mechanisms are in place. This won't be a chaotic revaluation, it will be a surgical shift. When asked why these moves have remained largely invisible to the public, he smiled knowingly. Because that's how monetary policy works at this level. You don't announce these things in advance. You prepare quietly, align stakeholders, and then execute when the timing is perfect. Taken together, the five experts paint a stunning picture, one of deliberate orchestration rather than speculation. They confirm what many investors have felt for years, that the Iraqi dinar revaluation is not a wild fantasy, but a real, methodical financial shift already underway behind closed doors. The evidence isn't found in YouTube rumors or clickbait headlines, it's embedded in central bank memos, IMF audits, SWIFT corridors, regional settlements, and private financial modeling. And the individuals who've spoken out are not amateur analysts, they are the very people who have overseen currency reform across the globe. So, what does this mean for everyday dinar holders? First, it validates the idea that Iraq's currency situation is unique, not just because of its history, but because of its strategic importance. Second, it confirms that real institutional movement is happening, and has been for some time. Third, it offers a blueprint for what comes next: preparation, positioning, and patience. According to these experts, the revaluation may not come with fireworks and media fanfare. It may happen overnight, quietly, and with controlled access. It may involve structured redemption centers, biometric ID verification, and temporary exchange caps to avoid liquidity shocks. It may offer tiered rates based on holding status, documentation, and exchange method. But it is coming. The final takeaway from this remarkable set of testimonies is simple: those who are informed, calm, and strategic will be the ones who benefit most. Dinar holders who have waited years may soon witness the transformation of speculation into tangible financial reality. But the window will be narrow, and the opportunities fleeting. For many in the dinar community, this marks a turning point. No longer is the revaluation just a hope or theory. With these five experts breaking their silence, it's now a matter of documented movement, strategic alignment, and unfolding execution. So yes, believe it. The silence is breaking. The system is shifting, and the Iraqi dinar, long overlooked, often mocked, may be poised to rewrite the rules of modern currency reform. Like and subscribe for more videos.